Tesla's stock has fluctuated between rising and falling. The car company's trend shares were down 45 this year, following a near 50 surge in 2021 and a staggering 743 increase in 2020. The market has exerted significant pressure on the stock price, particularly as a number of unrelated variables have contributed to the stock price decline that Tesla has seen. Hi everyone, happy to be back to everything. Tesla shares nearly all following indications of slowing inflation in the consumer price index. Tech and growth equities recently saw significant gains. Tesla's stock nearly exactly equaled the Nasdaq's explosive 7.3 rise during that session, but it hasn't been able to take advantage of this increase because Musk's Twitter saga continues to take away from the firm's performance and growth story. In a recent interview, investor Charlie Munger expressed his optimism about Tesla as a company and how he believes it is outperforming expectations. Tesla has accomplished several incredible things in the EV industry and is expanding at a rate that many of its rivals find difficult to keep up with. See what Charlie has to say about Tesla in this video, but don't forget to like, subscribe, and turn on the notification before you watch. Bell to get informed about all developments pertaining to Tesla. Hathaway Berkshire Vice Chairman Charlie Munger recently praised Elon Musk's electric car startup, Tesla, describing it as a remarkable achievement in the U.S. auto sector. With a market valuation of more than $600 billion as of January of this year, Tesla has grown to become one of the most valuable companies in the world. Since 2009, the automaker has produced a total of 1.91 million vehicles. Munger expressed his surprise at Tesla's success, underscoring the company's strong stance in the EV business. In the first 2 quarters of 2021 alone, the automaker manufactured 386,759 vehicles, and in the third quarter of 2022, it delivered nearly the same amount, or 34,000 vehicles. The automaker's revenue for the same quarter ended in September was $21.454 billion, a 55.95% increase year over year. According to Munger, Tesla's revenue during this time was around $75 billion, up 59.8% from the previous year. Elon Musk, the CEO of Tesla, has accomplished several good deeds that others were unable to accomplish. He also mentioned that there hasn't been a successful new auto firm in a long time, calling what Tesla has accomplished in the auto industry a small miracle. Tesla has made significant contributions to civilization. Charlie Munger has a stellar investment track record. Earlier this year, at the Daily Journal's annual meeting, the investor expert predicted that serious trouble was ahead for the financial markets. He said that while some people were enjoying miserable excesses, this did not bode well for the economy. In addition, he said that the extreme shorts in the GameStop Bitcoin market at the time and the excessive amount of money that venture capital was throwing around were major contributing factors to these excesses. Munger added that if the government prints too much money, it will eventually cause more trouble than any that has been seen in the past, and that is no doubt what's happening today, with inflation going at an alarming rate globally as prices continue to increase across a broad range of spending categories. Most people find that they spend more on buying commodities than they used to, according to the 12 months percentage change in the Consumer Price Index as of October this year. Prices in the United States have increased 7.7% compared with October last year, with inflation on the high side. Fed had recently raised its benchmark interest rate by 0.75 percentage points, which was the third outsized rate increase in a row, bringing the Fed rates to 3% in a recent note by Morgan Stanley about Tesla. The investment company stated that while Musk's ownership of Twitter could affect some consumer sentiments regarding Tesla, any resulting weakness in Tesla shares could create an opportunity for investors in addition to a number of other issues. Tesla's stock is currently priced below 200 and seems to be weighed down by a number of opinions and debates surrounding the Twitter transaction. The ability of investors to confidently model the economic outlook for the company's core EV and energy storage businesses, which is supported by a favorable economic backdrop, is one of the main factors that drove Tesla shares to a high valuation status, according to Morgan Stanley. It also added that this confidence has also been tested recently and will continue to be tested through year-end. While it may not be possible to quantify any potential impacts that this may have on the Tesla shares, This is a regular topic for concern among many territory investors. Tesla has excellent fundamentals for producing cars, delivering profits and sales, profit margins, and technology, to name a few. Nevertheless, in spite of these advantages, the company's stock remains below 200, and it is unclear when it will be able to reach new highs. According to Morgan Stanley, these feelings may have an impact on Tesla in the following ways. First, on customer demand. Some customers might not want Tesla to be associated with controversy. Secondly, Tesla's commercial partnerships might be impacted. Despite being a highly vertically integrated company, Tesla still depends on a number of commercial partnerships that might also not want to be associated with certain levels of controversy. Finally, there could be an impact on the automaker's government relationships and support, as well as on investor sentiment and capital markets participation. Although Tesla is currently mostly self-funded, the company's industrialization of renewable ecosystems and onshore battery development require close cooperation with sovereign entities, particularly in the United States and China, to achieve the growth implied by its current $600 billion market capitalization. The company will need to maintain a strong relationship with the investment community. The investment company went on to cite a $150 bear case for Tesla's stock price before the year ends, stating that there will be a window of opportunity for potential Tesla investors due to potential concerns about the overall sentiment and the slowing demand for EVs, especially in China. The China team has commented on the recent significant price cuts in that market, and in response, Morgan Stanley expects price cuts to follow in Europe as Tesla's Giga Berlin starts to surpass production of 5,000 units per week. Morgan Stanley also believes that Tesla may continue to cut car prices in the future. Future production cost reductions are something Tesla will take advantage of, but this will only be possible if the automaker maintains tight control over supply in order to meet the higher demand brought on by the cheap prices of its EVs. According to Morgan Stanley, Tesla shares could trade for about 12.5 times EV per earnings before interest taxes, depreciation and amortization, and 23 times PE on its 2025 forecast at the price of the 150 Bearcat stock. The company views this as an excellent value for a self-funded top-line grower like Tesla that is well-positioned to profit from re-architecting the U.S. renewable supply chain at scale. Tesla is capturing a sizable portion of the rapidly growing UV market, both in terms of market shares and profitability. Tesla previously disclosed that the average cost of parts and assembly for one of their cars is around $36,000, but the cars sell for $10,000 or more, making Tesla the most profitable automaker in the world. As a result, Tesla is also facing an increase in demand and is devising convenient ways to meet this demand. The carmaker recently shortened the delivery waiting period to at least 1 week for all of its Model 3 and Model I vehicles. Prolonged wait periods have been a big concern for those looking to purchase Tesla vehicles, while shorter wait times have resulted in lower demand for the company's EVs. Might also scale higher in comparable news when compared to a Japanese manufacturer. Tesla's profit margin per vehicle sold was 8 times higher. Toyota, what are your thoughts about Charlie Munger's statements about Tesla? Let us know below, and don't forget to tell us what you think the company is worth. If you want to learn more about what Tesla has been up to recently, click on the next video on your screen. We'll see you there. Tesla reported a 2022 Q3 net profit of $3.29 billion, while Toyota stated it made a net profit of $3.15 billion. This is despite the Japanese brand delivering 8 times more vehicles than Tesla.